Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey snipers, what's going on? I just want to get into a recap of what happened on our live post New York session, Wednesday, July 3. This is a recap. I'm not going to take too much of your time, but I just want to talk about, had some questions about this setup and why I went in with the sell. So I just want to break it down for you guys. So it is XAU USD. We did a top-down analysis on gold. We went from the daily to the hourly down to the 5-minute time frame, where we entered just after 12 p.m. Eastern. So it's this setup here. First thing, there was some big US news at 10 a.m. Eastern. So you can see 950, 955, and then they gapped up the market, this gap in here. So what we did was we located this gap. We made a neutral box inside here, and we brought it all the way into the future like we normally do. And what we did was we made it a neutral box in here. So I'm just gonna, 1 second here. Okay, so we made it neutral in here. And then we started the call at 11 a.m. Eastern. So we were over here. This is gold was making the higher highs. Then it pulled back into this gap before we even started our call. And then it came up here. This is when we started, 11 a.m. So when we started our call, it was basically at the high of the day. So what we did was we located the high of the day. We had a purple line because when we did our top-down analysis, we had this marked up. But what we can do is we can make this a supply zone going forward into the future, and we bring it across like this. Okay, and then we started to see that when we started our call, it pushed down into here, into 50% of this big body. We came back up, but it wasn't really creating any new higher highs on the day, and started to consolidate in here, and we watched it come up through here. What we also did was, this was a 2363 critical area in the market. So we kind of identified this area with these bodies. You see how we've got a body here, a wick rejected here, wick rejected here, a body here, and a body here, and then we pushed down. So we saw right here 1155. Okay, they pushed it up where they broke the liquidity, but it didn't take out the high of the day, and then it came back down, and it was a spin top indecision candle which closed below this 2363 critical area. And then we had the start of 12 p.m. Eastern. So these are our higher time frame candles, our hourly open, and sometimes we do see momentum switch at these times, where we saw this big red bearish engulfing candle take out 1, 2, 3, 4, 4.5 bars down in here and close. This is where I entered the trade at 12:05. When it opened, it initially went red, so I went in on it was an ignited red candle and broke the low. So I entered right here, thinking that it was gonna just open ignited red and start the descending fall. But however, when it came down, when I went into the trade, it came back up. So what I do is I always see that there's a 50% of this candle. So normally what I do is I take my cutter line and I identify half of this red body candle, that bigger base candle, and I see around 2362.35. That's about halfway. So I gave a very generous stop loss. I could have kept my stop a little tight right above that area, but if this was a green candle coming back up in a pullback, maybe close above here, I probably would have got stopped out. So if you are noticing that you're getting stopped out with really tight stop losses, you might need to just give it a little bit more room to breathe by decreasing your lot size, and you can still manage the same risk. Okay, I put my stop loss above this structure, but above also the high of the day. So I kept it above here around 2365. So that was my maximum risk on the trade. I was above the high of the day structure. It was descending down, and then I started to see this big body, red body close below. And then again, when it comes up, guys, don't panic. I see a lot of traders are panicking when they're in the trades. Just if you're on the right momentum of the move, you give it enough room to breathe, and you understand your structure in the bodies of the candles and your higher time frame areas, then maybe just learn how to place your stop just a little bit above the structure, and it might allow you to hang on to the trade a little longer. This was also the previous day where we had the gold buy off of the live session, where after the call we had to allow it to develop, and it didn't come down to our stop loss. It kept building higher lows on the gold buy, and then it reached target. So this one, thankfully, on the call, I got to break this one down as we were still on the call together. So this red body candle kind of verified that we did close below 5-minute structure right over here. This 5-minute structure that was being built in the market right here, where the volume was consolidating in this big cluster right here in this zone. If you need to trap the candles and trap the volume, you can trap it like this if you have to. Just showing that that's a neutral area, and that the red bodies physically close below the zone. Yes, they did come up green where I was in a little bit of minimal drawdown. So if we just measure the drawdown on today's trade, I entered right here. The maximum drawdown on this trade was 8 to 9 pips. Not a lot, but for the reward, it came down for about 30 pips down into this zone, and then I'll talk about the retracement back up, then the next drop. But we were looking for it to fill into that 10 a.m. news gap, where it did come all the way down into here for approximately, if we measure the move, we measured it on our call, and it was approximately about 30 pips down into here. So again, if you're in the trade, you've got some rules what you can do in here. You can what I did when it was pushing down 25 to 30 pips on this big red candle, what I did was I reduced my risk. So I brought my stop loss from the high of the day, and I reduced it right down to here, to this consolidated level where I was still above 1 rejection and 2 rejection and that bearish candle. And then when it started to come down in here, you know, it was a different day today. The markets were closing early due to the July 4th Memorial Day in the US. So I wasn't really allowing the trade to come back up. I really wanted to go down to a break even while I was in profit. And then when it came down to approximately 30 pips, normally what I do is I close out 80 to 90% of my trade, and then I leave the rest running with the break even. On today, however, I did close out the entire trade in this block. Did I make the right move? Yes, no. Could I have held it a little longer and then got the maximum move? You know, those are those things that we always debate every time we're in a trade. But I trade more into zones, and then it keeps me more consistent. And I'm happy with 30 pips on a scalp with minimal to about 8 pips of drawdown. So it's about a 1 to 3 risk to reward, just getting the 30 pips. So it's not too bad on the R&R. And then what we also did, I was playing this trade live with you guys. My cutter line on this red body candle, you take your cut line and then cut that body in half right there, and then it lines up with this previous low wick, and then you can see the pullbacks. The pullbacks started to happen in this gap zone from the news in the morning. We pulled back up green right into here. Yes, there was that little impulse break, but I don't see any green candles closing above 2359, 2360 area. And then 1245, that new 15-minute candle opened, and it was that big red body pushing down and close below our critical zone. So what you can do with the critical zone now is you can make it red when you get the bodies to close below, to signify that it is an area of supply. Okay, and then the body closed below. Then you see the candle open up green, come back up into this body of supply, and continue to flush all the way down to the bottom over here, when just right before the news, 950 and 955. Then you can see where they gapped up the market, where the US dollar dropped on that news and gold pumped up. So we were below that. Maximum move was, we had it down here for about 50 to 60 pips around 2355 area. The red body did close below, but if you didn't, you know, grab down there, if you had a runner, you know, that's 60 pips, guys. That's a good trade to end the day. You cannot get too greedy. You should be at least closing the majority of your trade down there. And then you can see how it really rotated right back up after 1 p.m. This is after we ended the call, and it rotated right back into you can see if you stretch this box across, it cut right the bottom of the box. You know, that's where I entered. If I still had a break even, if I was still in it, you know, if the broker allowed me and didn't really manipulate me out of there, it was still good to continue to flush down. But that's why I close out trades. I did get out a little early now looking back at it, but that was my target, was just the clean 30 pips. Had I held a runner or the entire trade, we still got confirmation that it held below there. And then you can also trade down with the momentum. So as when you're scalping the markets, if you guys get out of a trade, you can still follow the same volume and see how it's moving and start to move with the trend if it's making lower lows and lower highs. And over here where we broke below here and then it pushed down. So I'm just looking at this previous area right into here. And then right into here, it's the demand area of this area, and then just bring it across going forward. Just 1 second, guys, sorry. Yo. Okay. Yeah. Okay. Oh. Sorry, guys. They're gonna close up shop here, so I got like 2 more minutes to go, guys. They're gonna close me up, so I got to finish this call. But you see how it held support, and then if you draw your zones across into the future, this green box is still holding green, and we're kind of rotating up. Bring your red box across. Markets are closed right now, like pretty much closing. We're consolidating in here, so we're going to see how we're going to open up. Will we open up above 23.58 and continue to come up to here, or are we going to break below here and continue to drop? But guys, that was a quick little recap of our call today. Sorry about that, but they're telling me that they're closing up here, so I got to get off this call. But I hope you guys enjoyed today's recap. If you guys got any questions, shoot them in the comments and let us know. But if you were wondering why I got into the sell, that was my bias on today's sell. And yet the day before, we got into the gold buy, and kind of broke that down before the call. So guys, make sure to subscribe on our YouTube, leave some comments, and we'll be back trading with you guys live. So have a great evening, everyone. Thanks for joining, and we'll see you guys tomorrow. Thank you, guys.